Welcome back, everybody, to the Mortgage and Real Estate Schools in Session 2020, September 2020 video. Hot topic. Oh, pay off your mortgage, pay more towards your mortgage. That's the dumbest advice anybody could ever give you. If anybody tells you that, they don't have your best interest in mind. They have no entrepreneurial spirit. They don't know about investing. They don't know how money works. And they, frankly, just don't care about you or themselves, clearly. So let me explain to you exactly why you do not pay a penny more towards your mortgage. So let me pull up this chart. And here we are. So do not pay more towards your mortgage. Okay. Right now, there's an amortization schedule on a hypothetical $300,000 loan at a 2.5% 30-year fixed interest rate. So let's say you closed last month on your home or on your mortgage. Your interest payment due this month would be $625, and your principal payment would go towards the $300,000 loan amount. Now you have a loan balance due of $299,440. So you make a total payment of $1,185, and $625 that goes towards interest. Now scroll all the way down to December of 2022. So after 2 years of having your home and your mortgage, you're finally breaking even between interest and principal. So in red, you could see your payment due in December of 2022, $593 goes towards principal, $593 goes towards interest. And after making, let's just call it again for argument's sake, 28 payments, you've now knocked off only $16,140. Now you still have 300 plus payments left. Okay. Now here's what my recommendation is. I Googled this. You could Google the same thing. What is the stock market's historical annual return? The stock market has historically returned an average of 10% before inflation. However, stock markets return vary greatly from year to year and rarely fall into that average. So again, sometimes you return 15, 20, 30%. Sometimes you lose a couple percentage points, but over the history of the stock market, it returns 10% per year on average. Now, let's say you take that same extra, pay an extra payment at the end of the year, or pay an extra, $87 a month. Rather than doing that, what you want to do is take that money. So let's say you're going to make one extra payment per year, and you're going to put that into the market. Speak to a financial advisor, speak to somebody who knows how to invest money, so you can try and get that 10% annualized return over the next couple of years. You take that money in. If you put $1,185 or $86 every January 1st, let's call it, into the market after 30 years. So you're putting $36,000 in, let's call it. Let's actually calculate that. So it's $1,185 times 30 years, you're investing a total of $35,550. After 30 years, you're going to have $235,096 based on prior market performance. It's incredible. You're going to 8 times your money. $35,000 over 30 years turns into $235,000, okay, if you invest it properly. Now, with that being said, if you make one extra payment on your mortgage per year, so you make 13 payments in 12 months, you're only saving 3 years and 3 months off your mortgage. So now your 30-year mortgage goes down to 26 years and 9 months. It's ridiculous. And you don't have anything to show for it. Great, you have a house paid off, but interest rates are so low that you don't want to do that. That is not the smartest move right now. So here's the calculation. Again, if you put $1,185 per year into an investment over 30 years, that's how we come up to that initial number of $235,096 in 30 years from now. So I really don't care what anybody says as far as making extra payments. It's absolutely ridiculous. Right now, job uncertainty is big. Repairs on properties are big. Home renovations are big. Take that extra $1,185, and I guarantee you somebody that knows what they're doing can put that money to grow faster than 2.5% per year. What people also don't tell you is, even though your mortgage rate's 2.5%, after an average tax benefit, let's just say 25% discounted because you get tax write-off for having mortgage interest, 25% of 2.5% comes out to like 62.5. So you're at a total net interest rate of under 2%. You're at like 1.875% after the tax deduction. So if you can't figure out a way to earn more than 2.5% on your money, man, call me up. I'll give you some great ideas. Some work out very well. Some make you a little bit of money. Some you don't lose money. But, oh, my God, money's so cheap right now. You do not pay off debt under 3%. So if you have any questions, please, always let me know. Feel free to reach out. The number one thing I can tell you right now is a lot of uncertainty in the market. Be sure to subscribe to this YouTube channel. I'm going to try and do a video every day as things come up. Follow me right here on Instagram, post some tips daily. Check out Deposit That Podcast, depositthat.com, depositthatyoutube.com, also available on Spotify and iTunes. So again, whoever tells you to pay off your mortgage early is wrong, 100% wrong, and I'll go to battle with them any day of the week if they want to challenge that. So make sure you do the right thing, understand how money works, be happy, be safe.